Okay, so John asked a very good question. I get this question literally every week because you'll see once you see my profile, I did spend a number of years on the Merrill Lynch Bank of America Delta One desk, as well as the ETF trading desk. So let's talk about, so what is Delta One trading? It's pretty much in the equity world, it's a little bit of everything. So it's trading programs, it's trading baskets, it's trading indices, single names. It's doing that via swap, which a lot of hedge funds use as to get synthetic exposure. I mean, you have to remember, before there was ETFs, in order to get exposure to the S&P, there was no SPY. You could either do that futures or you could put on what's called an equity or index swap and get synthetic exposure to the SPX. So funds still do that quite a bit. They'll do that for a lot of times for funding reasons. You can lock in an interest rate on an equity swap or an index swap and have exposure for a longer time. So as interest rates fluctuate, big, large institutions will tend to do that and lock in a rate. So there's that. There's also on a lot of Delta One desks, there's the ETF trading, which I'll get into in a minute. What I spent on a number of years, and I led a platform which was customized indices, customized baskets. So how that would work would be a hedge fund would say, you know, there isn't an ETF that's out there that where I'm looking for, I think somebody asked for today an energy refiners ETF. Well, there isn't a pure energy refiners ETF, which was a really good example. So a hedge fund would come in and they would take your Tesoro, your Valero, and all the other names that are refiners, and they would customize their own index, and they would give me, hey, here's the 10 names that we want in an index, equal weight it, market weight it, and I would go ahead and set that up for them on Bloomberg so they could see it pricing just like an ETF does. And then when it would come down to trading it, I would trade all those underlying names and provide the customer, the hedge fund, back a fill based on where the index was trading. Very similar to trading an ETF, but doing it synthetically. There's actually a new service that does that now, motif investing, which has piqued my interest because it's one of the few places where you can kind of create your own index. Well, hedge funds used back in 2006, 2007, when I started trading, I was doing that for hedge funds and rebalancing them. So they would say, you know, after a couple months, just like the S&P rebalances, they would say, okay, go ahead and rebalance those constituents back to equal weight. So that's a little bit about custom basket trading. What I also did quite a bit of is trade futures. So Delta One is basically means, you know, you're using a derivative that equals the same thing, but, you know, could be equaling the S&P index, but you're using futures. Or it could be using an ETF SPY, but it still equals the SPX. So it's one for one, and that's what Delta One essentially means. Other things I would do is trade single stocks. I would trade single stocks through all the baskets that I was trading and program trading, as well as trade single stocks for index rebalances. So I did quite a bit of that. So I've got really, when it comes to equities, I've done it all. I used to trade a little bit of options as well. Back in the day, I was fully licensed, Series 7, 55, 31, 3. So a little bit of everything. I'm also working towards finishing the CMT, Chartered Market Technician, which is all, basically for technical trading. So that's a little bit of my background. But Delta One covers all kind of corners of the market. So anything that isn't really done on a cash desk can either be done on a derivatives desk or Delta One desk. Okay, so I hope that answers your question, Mr. Voorhees, but I do get that question literally every week once we get into my background. So let me go ahead and read the disclaimer. Day trading, short-term trading, day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker or RA for execution, margin, and other capital requirements. Everyone watching the presentation adheres to all disclaimers on www.optionhacker.com and www.keenonthemarket, as well as the new Alpha Shark, which will be coming out shortly. So at this time, after the disclaimer, I always take a drink of water, as that's one of the longest-winded disclaimers that I've seen, but I now know this disclaimer pretty much in my sleep. So my background, we already talked about that. We talked about Delta One. I traded ETFs, why I like ETFs, and Andrew does, he's done a really nice webinar on ETFs as well, which he really gets to the basics, which sometimes I forget to do. So by all means, if you guys have questions, about the nitty-gritty of ETFs and why people trade them, I can answer any of those questions. So we'll try to make this as I normally do, as interactive as possible. If you guys have questions, feel free to ask me them as we go along. And if I miss them, just throw them back in the chat box, and I'll get to them. So why did I get involved in ETFs? Why do I love ETFs? Because it allows you to trade every corner of the market, especially with what's been going on in the recent month or two with China, Greece, Europe. You can find an ETF and you can trade that corner of the market through various different ETFs. So I used to do a great deal of trading international ETFs. Domestic ETFs was always my bread and butter, trading those underlying baskets and making markets in those names. But international, I also did quite a bit of work in, as well as fixed income ETFs, which are now also heavily traded, commodity and currency ETFs. So I started off my career, and I mentioned this, as volatility has picked up, I've been trading since I think 1998 was when I was an intern at Morgan Stanley, and then from there I was an financial advisor, an FA as they call them, at Morgan Stanley. It was actually, before it was even called Morgan Stanley, it was called Dean Witter, just to show my age a little bit. But I've been in now I've seen two big market downturns. Obviously the tech bubble, so I saw that rise in the beginning of my career, and then it was a really tough time to start as a financial advisor as that bubble was pricked in technology. And then finally not finally, but the credit crisis. That was some of the biggest volatility that I've seen. Every day you came in and you never know what you were going to expect. You saw, what's going on in China is a little bit of deja vu for me when they talk about when they start to ban different things, when they start to ban short selling in financials, which happened in Europe. It also spilled over to what the U.S. was going, but you kind of forget those times, being that was back in 2007 and 2008. But a little bit of, and today's volatility is nothing compared to what it was. We used to joke around. There used to be our head of, back when I was at Merrill Lynch, the head of San Francisco sales trading said one night he had a nightmare, and this is when the VIX was trading, I think, over 50. And he said, I had a nightmare last night that the VIX was trading over 100. And we almost got to that point. I mean, it got that volatile back in 2007, 2008. And, so right now we're at 20. So, if you think things have definitely gotten volatile and they've picked up, which is great because it allows you to really take advantage of the up and the down move. So I've been really excited about what's been going on, and rather than about a month ago, we were just trading in a 10 bip range some days. So, you really have to. So let me go ahead and get into the webinar before I jump ahead, as sometimes I get ahead of myself. So let me see what your questions are, and then we'll kick this bad boy off. So what's the difference between all the weighted triple, double ETFs? So that's relatively, I wouldn't say new, but that's been basically brought on for the retail trading, to give you leverage to 2 times, 3 times, different areas of the market. Because I know the mechanics behind how these things work, I actually used to do the hedging for some of the big players out there in the double and triple leverage universe. I know how the mechanics work, and I know that these are primarily set up. So I'm not going to talk too much because I could really and someone's been urging me to do a whole webinar on leverage ETFs to get the understanding. I'll get to that. I will, definitely do that, because it's basically, I can spend 45 minutes on why they're less efficient than you think they are. So they're great for day trading vehicles, but to hold longer than a day is not what they're designed to do. And you can go onto their websites and you can read the prospectus, and you will see that they are designed for day trading vehicles. They're not designed to replicate the performance of double or triple leverage or inverse for more than a day. So that being said, that's my feel on that. I think they're great for, if you want to play for a day movement, but if you're in a choppy market, you will find that they decay faster than owning, something like XLF versus something like FAS or FAZ. So I'm going to move on to the next question, because again, like I said, I can spend about, a good hour on that. What else? Futures because of Greece. Are futures up because of Greece? Let's look. I haven't. Wow. So yeah, there has been a proposal that's been sent over there. I don't have CNBC on right now, but I did hear over on Fast Money that I think some of the proposals on there were much more concrete than what's been going on. So yeah, that's just futures rallying a bit. So I reduced a lot of my exposure, some of the short positions that I was in. For those of you who are members of the trading room, I've been short a lot of things. So I took some positions off. I took XME, not completely off, but I took a lot of it off, as well as XOP. But we'll get into that. We'll get into charts. So let me, since we're 15 minutes in, let's talk about what's moved so far this week. Well, S&P is down 1.3%. Not as bad as some of the other indices. And there's going to be a few different typos in here. I put this together very quickly today. The Nasdaq down 1.7%. So here's one. Russell IWM small caps down 2.2%. SPX is now below the 200-day moving average, which will now act as resistance. So let's look at my first chart that I've got set up for you guys. So if you remember the trading room, I bring this up literally every day, just to talk about what's been going on. I had mentioned before, it was kind of like, and I've been using this, I don't know why I've been using this a lot, but it feels like the boy that cried wolf. We touched the 200-day moving average literally 3 or 4 times after we broke out of this little channel. So here was the channel that we were in. Come on, work with me. All right, this doesn't want to work but we were locked in this channel, for a good couple of months, all the way back to February. So you knew something had to give, right? We kept bouncing around here like a ping pong ball. So we broke down. So we decisively moved in one direction due to a lot of overseas pressure and uncertainty. The market does not like uncertainty. So, hey Celia, what's going on? So a lot of people I see in the Sean's in here, Arthur's in here, so great to see you guys. Thanks for joining me in the webinar tonight. So here's what I see. So we broke down between this channel. We touched the 200-day moving average about 3 or 4 times, and it was kind of like the boy who cried wolf. You kind of felt like it was going to happen. It broke down. And then finally, it closed below the 200-day moving average. So this is what I see. Now, it could be that, there's a lot of headlines going on. As we just looked at futures rallying, a Greece deal could kind of change things. We could get right back above the 200-day moving average. One thing I wanted to point out here, I've got 2 different percentage moves. Let's talk about, first of all, we're not really that far from the highs of the market. So while there's been increased volatility in the market, we're only down 4% from the highs. So this isn't, what we experienced back in October. It hasn't been, a real 10% move. It's not the volatility that China is going through. So it's not that bad. Where could I see we find more support? Well, of course, we could bounce back above the 200-day moving average. That's a real possibility. Now, I would say that right now, short-term resistance would be the 200-day moving average. Now that we're a little bit below it, we're just ever so slightly below it. And the 100-day would be the next, as well as this channel, which is basically this very close to the green line, which is the 100-day moving average on this chart. So those are the next two areas of resistance. The next area of support, if we do manage to have further weakness, is where I see right around this area, which is down about another 3%. So not a huge area, but we're kind of stuck in the middle right now. Yeah, it does feel like, so Karen, good to see you in here as well, Karen. Does feel like a little bit of repeat of, you know, you had a trend line here as well, which we broke above, but it does feel a little bit like January. And if you go back to a weekly chart, we're still very much in a bullish trend. So nothing has really changed. If you, which is always good when you have a little market volatility, always to take a step back. So, you know, we're pressing along. I don't have another trend line in here, and Thinkorswim, I'm not the best in drawing trend lines, but you can kind of draw an imaginary line on the weekly chart of SPY. You know, we're kind of touching upon the support here, very similar to what we faced in October. So we can very much bounce from here. Notice we crossed in October just briefly the two moving averages that I have on my charts, and then we flipped the other way. All right, so now going after covering just a little bit of technicals in S&P, a few observations, and I normally have probably 3 or 4 observations, but there's a lot going on. So right now the VIX is at 20. That's higher than we've seen. For a while we were in the low teens, between 12 and 15. So we're a little bit heightened right now, 20. You know, still historically that's really not that high, but it is out of the range of what the recent history has been. And I thought this was interesting. You know, people, you know, the talking heads on CNBCs were saying, well, why do we care so much about Shanghai? It has a very low correlation to the US markets. That's true, but it's getting a little bit more correlated because people are starting to realize the ramifications you know, while the Shanghai doesn't have a huge correlation to the SPX and to the Dow and to small caps here, the ramifications of China slipping into a recession does affect us. And I think you saw that very heavily with some of the selling that happened in the semi space, Apple included, in technology. You know, as the Chinese are, you know, as the stock market affects them and is going down, they're not going to be able to afford buying. You know, so you can kind of draw that parallel. So that's my own take on what's been going on over there, is that, you know, if they're losing money in the stock market, their wallet is going to be thinner in terms of buying electronics. Yeah, so Karen, yeah, absolutely. They've been a huge consumer of materials. So I think that's why we've seen a lot of weakness, further weakness. I mean, industrials and materials have been a weak sector, but they've been really weak the last week or two. So what else? Greece hangs in the balance. We could very much see, I feel like much more confident than I've been in the last 3 or 4 weeks. But again, this is just my feeling, that we're very close to a deal. I think finally, Merkel, so Germany, France, I think they finally put their foot down and said, hey, we're going to have a meeting this weekend with all of the countries that are in the Eurozone, and we're going to be deciding your fate basically this weekend. So I think the wait is out, and I think Greece, the longer they wait, the more they need aid. So one way or another, I think my guess is this thing's going to be resolved by this weekend. Either they're going to be kicked out or they're going to have a deal, which I'm excited. I want to stop talking about Greece as much as you guys do. Yeah, so real estate, yeah, I'm actually a little bit worried about, I'm starting to think about New York real estate. There's been a huge amount of foreign buyers, and the prices in Manhattan have gotten really high. And a lot of the condo buying has been from international markets. A lot of Chinese have bought condo markets. So I'm starting to think about that in terms of my condo in Manhattan. So yeah, I agree with exactly what you guys are saying. So I don't know. I don't know which way it's going to go, but I think that, I mean, you could see what futures did. We can go back to what futures are doing, but it sounds like the preliminary review, and I think they were having trouble with, I was trying to listen to Michelle Cruza Cabrera, but I think they were having technical difficulties while I was listening, but it sounds like they've gotten a lot closer. So we'll see what happens. Okay, so we already talked about uncertainty. The market does not like uncertainty, regardless of like how much the little impact Greece has in terms of their little GDP and so forth. The market doesn't like uncertainty, and that's one of the major concerns of the market. Another thing that I've been noticing is, with what's been going on in China, there's been big moves in futures overnight. For the last two sessions, the market is really moving a lot based on where Shanghai opens and trades thereafter. 2 nights ago, Shanghai really got hit hard, as well as Hong Kong. So immediately there, and I was trading futures. I'll be honest, I was trading Nasdaq futures, and I went short Nasdaq for a couple hours, and then I went to bed. But you're seeing these huge moves, and then last night, by the time our market opened, which is kind of I feel like we kind of get gypped out when this happens. The market, by the time it opened, was already up 1%. So it makes it difficult. I think, I started looking at names. Hey, do I want to go long here? I'm like, well, I don't know. We're already up 1%. How much more is it going to go just based on China taking having a bit of a bounce overnight? So I looked at the charts for the first 10 or 15 minutes, and I decided to add to a lot of my short positions, which really worked out today because we did nothing but sell off. I have been trying to dip my toe back in. So the next, let me just go through the rest of the bullets here. So Fed fund futures. So the one thing that's been, if you want to have a silver lining in all of this, the Fed fund futures are now implying a November to going up to November, December, only about a 10 bit move from where Fed fund futures are currently implying the first rate hike, short-term rate hike. And so it could be, so who knows how they are going to have the first rate increase. Traditionally, it's a 25 bit move, but I wouldn't rule out a 10 bit move just to kind of get the ball rolling. So Fed fund futures for a complete 25 bit move isn't being priced in until March. And I look at this quite a bit, especially with the turmoil that's been going on overseas, as well as whenever there's a new economics that are released out into the marketplace, something that's kind of a little bit game changing, I'll pull up Fed fund futures and see if anything has really changed. How do you find Fed fund futures? So great question, Susan. Good to see you, Susan, as well in the webinar. Let me see if I have this up someplace. I do. So this is right off of the CME website. So I would save that. I have this as one of my favorites. So I'll go ahead and pull that up. And how you can read this, let me just, I know you guys can't see this probably on my screen, but I'll look to where Fed fund futures are currently pricing, and you kind of have to work backwards. So right now, 99.87 is where interest rates are. So you have to subtract this basically from 100 to get 0.13. So you want to subtract, you want to see when this moves. And the first time I see this move out, at least 10 basis points is, so I'm looking for 99.77. So that's between November and December. So this changes daily, yeah. So Karen, not trusting the China bounce with half their stocks halted. Yeah, exactly. So that's why I keep referring to, sorry, Karen brings up an excellent point. And I forget again that you guys can't see her comment, so I'm going to read it. Not trusting that China bounce anyway, with half of their stocks halted and short selling forbidden, what's going to happen when all those rules lift? Yeah, so China, the government has their hands in what's going on. It's very much being manipulated. So that's why I keep referring to it as the Wild West right now. I'm not really touching the China market because anything could happen. It's too volatile. It's too uncertain for me. I got the question. I've been getting this question all week long. We have the open house going on over at Keen on the Market. And I think there's some new traders in there, and they're like, "How are you going to how are you trading China? What are you going to do? Are you going to put a call spread on? Do you think it's good to short ASHR here, buy FXI?" And I'm like, "I'm not doing anything. It's gambling, especially because you don't know if the government is going to come out and do something different. Plus, you're not, unless you're going to be up trading during the China hours, you can't really get out of the position." Because by the time you come in, and start trading U.S. hours, those China markets are all closed. Now, ASHR and FXI and some of the other China ETFs, they will move and they'll get kicked around a little bit, but all those underlyings are closed, so they're really not going to move that much. ASHR did move a lot intraday because I think there was a decent amount of in trading in the secondary market. I refer to the secondary market as people moving around the ETF, even though all the underlyings in the ETF are closed. Very different than when you look at SPY or something like XLF. That underlying basket is open and trading. The financials, you talk about Wells Fargo, JP Morgan, and going back to what the fundamentals, how an ETF works, is it moves based off the underlying basket. It moves, so XLF will move based on what Wells, JP Morgan, Goldman does, all those names that are in the basket. ASHR and FXI will do the same thing, but that underlying basket is closed. So it will move around based on buying and selling pressure, but the real effect, and I've been bringing up this chart to kind of illustrate to people, future's still moving, and then we'll get off China. I feel like I spent too much time on China. So if you look at these candles, so this was one of the biggest candles that I've seen. As I mentioned, ASHR really got pushed around a lot. But look at under normal circumstances, look at these little candles and the gaps. That's because the majority of the movement is happening overnight. So if Shanghai opens up down, if Shanghai really sells off, you get a big gap in where the ETF opens, and then you get a little price movement during the day because China's not open. Then if China sells off again, you get a big gap to the downside. But you could see today people were really pushing it around, and that's because people are playing this like crazy. So look at the volume. Going back in the beginning of May, about 1 million, 2 million shares of Asher were being traded. Now there's 15 million shares being traded. So the secondary market is really getting pushed around. Yeah, so I agree, Timmy. Welcome to Shanghai roulette tables. Anyway, okay, so let's move away from China for a minute. So I wanted to talk to you guys a little bit about just trading in this market, being that the volatility has picked up. Where I've had success is, and I haven't I have been having more success than losing, but I have had losers. I put on utilities trade XLU yesterday. I'd like to talk about the losers first and get them out of the way. But I'm really using technicals to help me get out of trades. I got out of XLU a little bit too late today, and that's my issue with trading. I'm stubborn from time to time. But the losers that I had today were XLU, and I tried to trade day trade Celgene, which did not work out at all for me. But other than that, I'm really staying nimble. I'm taking profits on things. I've narrowed my profit targets. Just in this market, I think you have to do that. And I'd rather take off the risk going into overnight because you don't know when something like this is going to occur, right? It's too headline driven right now. And, you can have a possible deal with Greece and you could have a huge rally take place. So you really have to be thin out your positions, especially going into the next day. So I've been doing that. I've also been cutting the losers. I would have liked to cut that XLU trade off a little bit earlier. But before I go on to the rest of the webinar, just wanted to talk about what I've done in the last couple months and of my trading and option trading. I think what works very well is you have to really hone in on what your weaknesses are, and which is hard to do. It's not easy to do that, but I feel like just in the last few months I've really improved my trading, and I've done that with refining a technical system, which I'll get into the Power Alpha, but also I write down in a journal, where am I, for lack of a better word, where am I sucking? What are the things that I'm doing that stink? So I do that, and from time to time I build up too many positions. From time to time I hold on to positions too long. So those are and I'm stubborn. So those are things that I write down. I've got literally a sticky on my computer that I look at, and I make sure that I'm aware of these things. And every couple of days I'll take a step back and look at my portfolio, look at how many positions I have on. So, I just wanted to share that with you guys. And, I always encourage that in the trading room. If you guys are killing it, if you guys are having a good month, share it with the trading room, because there's always things that can be learned from others. It's a constant, in my trading, I've been trading now for I'm afraid to go back, but since 98, so 17 years, I'm always learning different things. So anyway, that's my little soapbox, but I feel like sometimes I get very focused in the day-to-day minutia that you have to really take a step back and remember what's working, what doesn't work, and learn from it. So Stan asked, do I know whether futures are up after the close? So Cyprus sent his revised plan over to the Eurozone for review. So he's put a whole new plan together of a possible deal for the debt deal over in Greece. So that's what I believe is driving futures. Okay, so let's talk real quick about the Power Alpha. I'm already halfway into the webinar, so that I'm only on the second or third slide. So let me try to pick it up a little bit. So I always get questions, especially in the open house. People are wondering what the Power Alpha is, and I haven't really given a good explanation. This is an indicator that we developed that I wanted something where I was looking at previously a lot of different technicals, and my trading style is I want to take positions when the technicals all line up. So if you look at the bottom of my screen, I've got the MACD, I've got Williams, I've got RSI. So the problem with this is it's not easy to monitor when all of the technicals are lining up together, which is, again, where I want to enter into a trade, or if it starts going against me, get out of a trade. And it was a little bit too cumbersome. So, I started to think about it. What if I had one indicator that looked at all of the different single ones that I look at, including moving averages as well, and puts them all together and associates a rating to a stock or an ETF and tells me how strong it is and whether the momentum is either increasing or decreasing, as well as gives me targets to enter into a position. So that's what we came up with, and Webb helped write the code. We went over this probably for a couple months back and forth, tweaking it. But what it includes is all the technicals that includes is the Ichimoku cloud, which Andrew uses quite a bit in his trading, MACD, Williams percentage R, RSI, relative strength, moving averages, as well as the Chaikin money flow. This is actually on balance volume is incorrect. So that's pretty much it. So it looks at momentum indicators, volume indicators, relative strength, and I'm looking for those indicators to converge. All right, so I'll get more into, so I'm kind of jumping around a bit. I'll get more into the Power Alpha in a few slides. Let's just talk about performance for the week. Again, I'm going to jump through this pretty quickly. So what's worked well? the reason why I do this is sometimes it's a little bit eye-opening. So this is actually not. I told you I would have a couple typos. This is not year to date. This is the what's happened in the last 5 days. So I apologize for the year to date up here. But what's worked well? Well, I think we've gotten a little bit defensive. Utilities, REITs, consumer staples. Home builders have actually done a little bit better this week with as interest rates have declined. TLT has kind of been a flight to safety this week. So what's performed horribly? There's a lot more names that have done really bad this week. Metals and mining, I've been short XME. We've seen unusual option activity a couple times now in XME. It's worked every time since I've seen it the last couple weeks. SMH, I've been short semis here and there, picking and choosing between different signals. Telecom actually is a little bit surprising to me. I don't know what's driving that. Usually telecom is a little bit more of a defensive sector. But again, this is why I take a look at this, because sometimes you always find something that's a little bit that you weren't picking up on. Materials also very weak, down 3.3%, and banks down 2.6%, taking a little bit of a breather considering what has happened with interest rates. Do I like the Greek ETF, GREK? I don't. To me, it's kind of like trading China. I think anything can happen. So I've been staying away from that one. I'd rather go to European ETFs. I did put on a position of VGK calls. I saw some call buying in VGK. That's one of the European ETFs. I also hold HEDJ very long term out to February. So I'd rather play the Europe move with things that are not as speculative as GREK. But good question, Greg. So Greg is also saying that VGK is up 2% after hours. Woohoo! But anything can happen tomorrow. Can't count your chickens yet. So here's the distribution. A lot more negatives this week, no surprise. And some of the defensives are outperforming. So here's before I jump ahead, here's all the US sectors and subsectors that I look at. So international names, very similar picture here. A lot of negatives. China, of course, we talked about that. Taiwan, the biggest weighting in EWT is Taiwan Semi, so that getting hit along with a lot of semiconductors this week. And then Japan. Japan really sold off, which is a little bit of a surprise this week, but they really got hit pretty hard as well. Nikkei was actually, talked about this earlier today, Nikkei opened the session, the overnight session last night down 3%. And rebounded once they open up about an hour before China does. So once China got a footing, Japan rebounded. But nevertheless, still down 5.3% for the week. And then emerging markets also got beat over the head as well this week. So I didn't even put, I could have put Vietnam up here, but I try to stick to the major, some of the major countries in here. But you could see, a distribution very much to the downside here. And then in commodities, not a lot of bright spots here. Gold, you would think, gold has not really been behaving how it traditionally does. Gold is actually down. Silver was down. Again, this is over 5 days. Every other commodity down pretty heavily as well. Palladium down. Oil down over 7%, so huge sell-off in oil this week. I mentioned that quite a bit in the newsletter. I'll get to the newsletter in a minute. Then fixed income. I'm not sure why this chart came out with the colors, but try to get past that. TLT rallied a bit this week, kind of a flight to safety. So Greg asked, do I like VGK more than EWG? It's a little bit more diversified. I chose VGK because there was a buyer right before the market closed in VGK. VGK is all of Europe. It does have a decent weighting towards Germany. Come on, Bloomberg, work with me. Oh, too far. So actually the biggest weighting is the UK in VGK. Switzerland, France, and Germany is about 13%. So nevertheless, if there's a deal that happens, they should all rally, AWJ, VGK. All right. So I also like to look at ETF fund flows. Where's my chart on? So before I go into fund flows, let's go over my little trading blueprint. So Andrew just texted me. He said he will be coming on shortly in 15 minutes. So surprise guest, Andrew Keene will be on in 15 minutes. Okay, so here's my what I call a three-pronged attack. I look at technicals as I went through the Power Alpha indicator, very much using this now in all of my trading, swing trading, day trading, everything. It's really been helping me get in and out. And we'll look at charts once we get through the webinar. I'll be happy to look at any of them with you. The second part of my three-pronged attack is ETF fund flows. I look for ETF inflows and outflows as clues to what institutions are doing. So I talk about this one quite a bit, but in the beginning of the year, there was massive inflows into these currency hedged European ETFs. That slowed down considerably, but nevertheless, these are saw the largest inflows of the year. And then I also look at unusual option activity, just as I talked about with VGK, just as I've been taking positions in materials and semis. Basically, I already will do my homework, and knowing the technicals, I know that semis are very weak, materials are very weak, steel names very weak. I went into a trade last week that by the time I saw the trade hit, trade alert, I didn't have to look at the chart. It was I put position in MT, which is one of the steels, and I already knew that the steels were all weak. So I didn't even have to go and look at the long-term chart. I went right into MT, huge winner. I think that worked out to be a triple for me in terms of, I think I bought that for around 50 cents. One of the price targets I took was $1.50, and I think I took the residual position off at around $1.25. So that's my three-pronged attack. I very much do my homework in the technicals. I know going into the day what charts are weak, what charts are strong. So then when I see the unusual option activity, I can go right into it. So the unusual option activity confirms my thesis. Okay, so now let's go into, here's been my, my performance. Andrew has been on me to share my performance. As of recent May, I was up 7.7% return on investment. June, 12%. So far, we're not even halfway through, but I'm up 3%. So I think that's a win considering what the market's been doing and the volatility. So now let's take a step back and look at the weekly inflows and outflows. So first, this is a little bit shocking. I've been noticing this every day. So our institutions and funds that manage money for retail investors, are they buying the dip? It does appear that way. And this is quite shocking. The people, when I say people, funds have been loading up on financials this week, which is a little bit puzzling to me because I like to buy financials once interest rates start going up. So I haven't really been partaking in this, but a lot of this is XLF, by the way. So there's been heavy buying in XLF. And then, a couple of sectors that we already talked about, there's been buying in some of the defensive areas, consumer staples and utilities. Also seeing this in discretionary, a little bit of buying in energy as well. And materials, which have been, materials have seen outflows up until this week. So perhaps a little bit of bottom feeding in some of these two groups. And then technology, some outflows, and industrials. Industrials has been the trend. This again is just for the week, but we've continued to see outflows in industrials. So then I like to look at the individual names to see if they're skewing it. So XLF is skewing that financials data. This is 5 days. But nevertheless, pretty heavy buying going in this ETF. SPY is also skewing the data a little bit. So if you take out these two ETFs, that's about $8 billion. So keep that in mind. Sometimes when analyzing ETF fund flows, because SPY is such a big fund, sometimes I like to strip this out and look at it without SPY. So if you take this number out, this number is a little bit smaller. It's probably only about 4 billion. So keep that in mind with a grain of salt. That the number would probably be about $3-4 billion without the SPY. But nevertheless, it is still, people I guess are adding to the biggest ETF that's out there. VOO, which is another S&P fund, diamonds, utilities, and actually people adding money to oil this week, which is a little bit surprising to me. Emerging markets has seen outflows for the last 2 weeks, and a little bit of money coming out of international. EFA has been a big draw of money this year, and you can see this. There's been a lot of buying this year in developed market ETFs. So here's, so I pull all this data from Bloomberg, so you can actually see a graphical representation of this as well. So that's why, one of the major reasons why I have Bloomberg, so I can grab this data. But these are the inflows, the outstanding shares increase in EFA. So it's pulled back a little bit from the highs, but you can see from the beginning of the year, pretty heavy inflows going into EFA. So what is EFA? How is it composed? It's a lot of Japan, and it's a lot of Japan and Europe. So 23% Japan. So very much, and then the rest of it is kind of like the VGK that we were looking at. A lot of UK, Switzerland, France, Germany. So a lot of Germany, a lot of Europe and a lot of Japan in EFA. So developed markets, international developed markets. And here's another, this is the shares outstanding as well, going back a little bit further. So big growth. But nevertheless, a little bit of money coming out of that ETF this week. Money coming out of tech, out of small caps. So good question, Greg. Let me bring up the chart. I want to keep going here a little bit because I'm behind, but I will look at a chart of Japan. But one of the things I wanted to point out with you guys as well, and I know the people in the subscribers in the trading room every day have heard me talk about this. But on the first of the month, one of the things that I saw was unwinding of some of small caps and mid caps and funds going into cash. That typically happens around the first of the month. You'll see funds change. They have a model shift, and for some reason they'd like to do this on the first of the month. Why they need to do it all in one day, I don't know. I think it's kind of jackassery a little bit that funds will trade enormous amounts on the first day of the month rather than spreading it, but that's what their model says to do. If I was, trading for them, I would not be impacting the market that much, but it kind of gives a sign to the market. It gives a tell. So I look for on the first of the month, I mark it on my calendar. I have an alert that comes up in case I forget to look at what's going on in terms of ETFs, big blocks that go up, volume that's different than normal. And as well on the 15th of the month. I do see a fund or two that changes their allocations around, their model shift on the 15th of the month as well. So I look at those 2 days. And what I saw on the first, which I was kind of pounding the table about, is there was a big amount that was going into cash. So as well as into a little bit more into large cap ETFs. So Jeff says the Chaikin money flow is negative for XLF. It's a little bit different what they monitor. I don't think that they're monitoring ETF inflows and outflows. So it's a little bit of a different formula. If you read about his how it's developed, I don't know if he's really looking at ETF inflows and outflows. That's why I put that into my analysis. Would cash include bonds? So yeah, so another good question, Simon. So funds, a lot of times, they can't go right into cash. Sometimes they're not mandated to do so. I was looking at a chart of Apple before touching the 200-day moving average. Kind of interesting there. A big sell-off in Apple today. But so if a fund is not mandated to go straight into cash, they pick the next best thing. So before I get ahead of myself, what is SHY? So SHY is an ETF. It's 1 to 3 year treasury bonds. So kind of resembles cash. BSV is another one that I look for activity in, short-term bond ETFs. So they don't move a lot, but funds can get away with shifting their allocation. Instead of going into cash, which they may not be able to do, they do the next best thing. So let's look at the outstanding shares of SHY. So you can see that beginning of April and a big move, which was what I was talking about on the first of the month, you could see that money has been pouring into, and you saw this in October, right? I mean, what happened in October? We had that huge correction. Well, look at what happened to SHY. Huge money went into SHY then. So pretty interesting, right? So when all that volatility happened, that's where people hide out. They go into these types of funds. So this is what's happening now. This is what was happening on the first of the month. People don't like the volatility, and funds don't like the volatility. They go into something like SHY. Anybody have any questions about that? Where do I look for these weekly fund flows? I pull the data out of Bloomberg. And I monitor this on a daily basis, weekly basis, monthly, year to date. And the webinar last week, I talked about fund flows for year to date since we're at the halfway point. Okay, so let's moving right along. Did I skip anything? So let's go on to Power Alpha. So here's where the Power Alpha is right now. This could all change very quickly. And the ratings do flip around quite a bit. These are ratings based on the daily chart. These are all the macro names that I look at. So SPY right now is a -9. These ratings can only, the rating system goes from being most bullish to a +12 to bearish -12 is mainly the range that I see. Right now, SPYs are -9. No surprise, the technicals have been breaking down for the last week or so. It went from a -6 to a -9 this week. Small caps, same thing, MDY. Diamonds look the weakest out of all of these. If you look at a chart of the DIA, this is now under the 200-day moving average. The Qs are not. The IWM is not. SPYs are now underneath the 200-day moving average. EM, no surprise, this has been getting pummeled the last couple days. Rebounded today with China, but still -11 falling. So not a lot of rising things here. The VIX is rising. TLT rising a little bit. Silver, interesting enough, is also rising a little bit in terms of technicals. So very much a deterioration from last week. I don't think this should really shock anybody. The technicals look pretty weak across the board. Same thing in sectors. We've already talked about defensive areas. Well, they are looking a little bit better technically as well. So all these ratings, again, are based on technicals. Not fundamentals, but technicals. So, Stephen, how would I view this? Yeah, so the lower the rating is, the weaker the technicals are. So XLE, XLB materials, and this mirrors, if we've talked about performance a couple slides ago. This has been, materials have been very weak. SLX steel, -12, XOP. I've been selling XOP on any rally. I did that today. XOP was up, crude was up, and I put on a bearish trade. That was also one of the newsletter trades, which I'll get to what the newsletter trades are, but a very profitable trade. Took off, I believe, 4/5 of that trade, holding the last piece of it, which is not as profitable as the other price targets, but that's why I take price targets. XME materials also very weak. What's the difference between MOO and DBA? I like to say MOO Mu is the agriculture stocks, so names like Monsanto, Potash, Mosaic, what's that other one? CF, I think, is in there. That's Mu. DBA is the actual commodities, so your soybeans, your cotton, your corn, the actual commodity futures are in DBA. Yeah, a lot of the fertilizers are in Mu. This is an old slide. I looked at the internationals, they're all weak, so not a lot to really go over there. So what's new and what I'm going to be doing in the newsletter that's going to be a little bit different is looking for relative strength and relative weakness and drilling down to the components. So how do I do this? So first of all, what do I see that's a little bit stronger than everything else? The home builders, consumer staples, we talked about that back here, as well as utilities. So names, and how I'm doing this, and I have a video that I shot for this as well, how to do this on Thinkorswim. But so take, for example, consumer staples. So let's look at, so drilling into the consumer staples, I have watch lists for all the components in consumer staples, and then I can drill down and see I'm looking for anything that's in this light blue. That tells me that the fundamentals are rising. I'm also looking for buy signals. So Costco kind of got beat up a little bit today, but still +6 and rising. WBA +11 and rising. Kroger +9 and rising. So a lot of these consumer staples names look to me stronger than everything else currently right now. KMB +5 and rising. So I'm going to be talking about this more and more in the weekend newsletter, and talking about when the buy signal has occurred. So that's what I see in consumer staples. And then if you look in weakness, doing the same exercise, drilling down. So this is very much like a top-down approach, looking at the best sectors and the worst sectors, and then drilling down to see what the worst names, the best names are in that ETF or in that sector. So APA, MRO, MHR look very weak to me. And we can look at the materials. So let me go to my watch list for materials, which is, where are you? So now I can see, yeah, so yeah, Karen, just stay tuned for 2 minutes. So here's what I'm looking at in terms of all the names that are in the XLB, the materials ETF, XLB as in boy. PPG looks very weak to me. APD, IP, International Paper, CF, Mosaic, or is this Monsanto? I forget. But you could see a lot more purple or magenta in terms of what's going on when you drill into the materials. All right, so that's basically how I'm doing it. And then, what I'm looking for is if I see any unusual option activity in PPG, MOS, I already know that these are the weakest technically. And same thing with XOP. So, or if I'm seeing unusual option activity in XLB or XOP, I'm most likely going to go along with it, and vice versa in the strong names. I used to do pair trades a lot more, Greg. So Greg asked if I do pair trades. When I was on the trading desk, that was my bread and butter, doing pair trades. And I would do them, when I had the capital to risk in cash. It's a little bit harder to do in options because if the market, obviously all the sectors, you really need good separation to occur for the options to work. But I do them from time to time. And if you look at, the positions on the notes tab in the trading room, you'll see I'm short things and I'm long things. So I'm really playing those themes out, the relative strength versus relative weakness. Okay, so we're going to get into the newsletter a little bit. Let me bring up last week's newsletter, which I don't even have up right now. So bear with me a second. All right. So what is the newsletter that I keep referencing? So if you're not receiving this yet, we are going to talk about an introductory offer tonight where you can purchase this. So what I do is sum up the week in a couple paragraphs, and I talk about anything that's really pressing. So I was talking about last week, will we hold the 200-day moving average? That was the crucial part that I thought, versus the 100-day. And what happened? We cracked the 200-day moving average. So that was my main focus that I was looking at. I sum up in much more detail than I went over on the webinar what the ETF flows for the week. I really break this down in terms of sectors, international, and anything that was really noticeable. For instance, healthcare has, not this week, but up until this week has seen a lot of inflows. I break it down by international, and then I break it down by individual ETFs. So category, I break it down as well as by individual names. Then I do this in terms of, just like I did in the webinar, the individual names that are really the biggest movers. Then I talk about the Power Alpha rankings that I already went over, and then I put a little paragraph behind what some of the real interesting ones that I think are. So I'm going to be breaking this out more in terms of what I was talking about with individual names. And then the chart of the week, oil. What did oil do this week? I really talked about how this was slipping. And broke below this channel. So what has oil done this week? Well, which chart did I look at? Oh, I had Bloomberg. So this was a pretty good, in my opinion, started to break below this channel. This is where I went, I talked about we saw unusual option activity in a lot of single names in the energy space. I tagged along with all those because I was watching what was going on with oil. I also shorted XOP. Oh, whoops, sorry. So I think that worked out extremely well for me. Here's a chart of XOP this week as well. So huge profits following unusual option activity as well as following the technicals. Oh, great to hear, Cheryl. Cheryl was also in the XOP trade. Okay, so just a couple testimonials, which I appreciate you guys giving. Sorry to have this in there again, but talking about the Power Alpha indicator as well as the macro ETF newsletter. I must say that the weekly ETF macro newsletter was the single most useful weekly market summary I've ever read. So thank you for the feedback, Greg. I love the format. Don't change a single thing. Keep up the great work. Can't remember the last time I can read an email 3 times. I love the indicator as well. So thank you, Greg, for that testimonial. Let me just go back to, and not everything, I was talking about XLV. I may add to one of my positions in XLV. Was talking about every time this has gotten weak, it's been a buying opportunity. So I don't think the move, there could be another day of, but I'm stalking XLV and IBB like a hawk, trying to get in at the right time once I, believe that we've gotten close to the bottom. Also, I put on one of the spreads that I've done is the weekly call spread. So selling a call spread. So far that trade's in the money as well. And then I talked about XOP already. There was no bounce. I was looking for a bounce on Monday. It didn't happen. I thought there was going to be further weakness. We did get further weakness in XOP. All right, so let me go to the newsletter. So we are going to, Andrew got very upset at me for offering the newsletter at a discounted price. He said I am giving it away, but it's an introductory offer. I want to make sure everybody tries it out, and if they don't like it after 3 months, hey, it's $99. So we were previously charging this $99 a month. We'll come back to pricing after the 3 months. We'll see how much you guys like it. We'll see how the trade alerts you get You get 2 trades per week that will get sent out via text and email. That was the other thing. That was another reason why I wanted to try this for, give you guys an introductory price, was because while I've been doing the newsletter for a couple months now, I hadn't been doing it with the sending out the alerts and so forth. So that being said, a couple alerts have gone out this week for those involved in it, and very much excited about having those alerts to send out to you guys. But that's basically what you'll get. Every Sunday, you'll get the newsletter breaking down all the things that I discussed, as well as trade alerts based on, what most likely I'll be talking about is similar, the trade setups that I'm going to be looking at for the following week, such as XOP, which worked out really well. All right, so Andrew, if you're on, and if you want to jump on.
Let me say something. I did not get mad at you for offering for $99 for 3 months. All I said was, are you nuts? Because if you actually break down $99 divided by 3 months is $33 a month, right? Which is like $1.50 a day. I go and I get alkaline organic coffee. It's like $7, and you're offering the newsletter for basically $1.30 a day. But I told you, if you wanted to offer this price, we can offer this price. If you wanted to offer for $999, I would support you and offer for $999. So I know Christian sent out a trade today, which is probably going to be a nice winner, which is a VXX, a short call spread in the VXX today. The futures are up about 16 points after the bell, so that one looks really good. I can just show you even here too. Oops, well I guess I can't. But Carol just said, I joined last week and the XOP was a wonderful trade. So we're really getting like positive reviews about this. This is the last time we are offering this price point, guys. So today we actually weren't going to offer anything at all. But I said, hey, the newsletter is trading pretty well. I think people are doing well, making money on it. Let's offer it to these guys for one more time. Yes, Cecilia, you can get on at keenonthemarket.com/ETF news. That is the link. There's actually no one in the office right now. So what you guys get for this, you get a 3-month subscription for $99. Okay, $33 a month, 22 trading days per month, so about $1.50 a day. You get 2 trades per week sent via text and email. This is one of these products that I come up with that I think is going to be a really good idea that I don't make money on. We do these products basically for break even as a service to you guys. Christian spends about 8 hours just doing the newsletter on the weekend. So he spends 8 hours times 12. It's about 100 hours of his work to do the newsletter, and you're paying $99 for 3 months of that. Okay, so the newsletter comes out every single Sunday morning. You'll get it and we reformatted it so it's a nice format. You'll get all the inflows, all the outflows, charts, things to look out for. And then I said, Christian, I've been doing this business for 3.5 years. What do people like? People want actionable ideas. They want you to say, when a trade goes across, a possible trade setup. And like I said, you took the VXX short call spread today, and that's going to be already profitable tomorrow. He had XOP puts. So there's long positions and short positions. I normally trade to the long side. I've gotten beat up, especially in Lululemon lately. This is another trading style and one that's been working well. So make sure you guys take advantage of this. Do you monitor the trades open and close? Do you monitor the trades? Christopher's in. Do we monitor the trades open and close? Are those included on Sunday or no, Christian?
Do I monitor the trades open? I'm sorry, I'm confused on the question. Is it we send out alerts for opening and closing? Absolutely. Is that what the question is?
Yeah, so like if you put on an open position, if you put on a position, do you say when you get out of the trade?
Oh, absolutely.
Okay.
Yeah, we're sending alerts as we hit targets and as we close the trade. So what, the difference is from a couple weeks ago, if you were reading the newsletter before, I was talking about, hey, you can get into this trade at last mark. No more of that. From now on, it'll be, hey, these are the ideas that I'm looking at. And then you'll get the alerts real time coming out via text and email.
Right. Okay. So yeah. So basically, this is the last time we're offering the newsletter, guys. It's $99 for 3 months. You can sign up later tonight. I won't guarantee that there'll still be spots available. I do not know how many we have. I have to ask Raphael and how many have been sold before. I'm going through my email. We're starting to sell these pretty well, not good. So make sure you guys take advantage of this. You get the newsletter every single Sunday. It's part of my Sunday routine. As I'm hungover, I try to read the newsletter, and then I take my coffee on the balcony and play with my dog. And then you got the inflows and outflows with trading ideas, but that's not good enough. We want actionable ideas, right? So you'll get trades sent to your phone and to your email twice a week minimum for 3 months. So you're getting 8 trades a month. You get 24 new trading ideas for basically $4 per trade. Okay, and these are both long and short based on his inflow and outflow plus unusual auction activity. And as we got some comments in the chat box, these trades have been working out very, very well so far. It is an ongoing rate of 99, so you'll be grandfathered in at that rate. Is it ETF news? Is it not working? Christian, you have the right link?
Yeah, let me see. This is the link that Raf gave me. I think we got the same one. Here, I'll put it in the chat for everybody.
I think you might have typed it wrong.
That should do it.
Did I spell it wrong? ETF news. Did I not put the forward slash? Because I'm looking at it. I see people buying. So.
Yeah.
Huh? Did I spell it wrong?
Yeah. No, people are saying it works. So yeah, the second one works. I don't know what the first one.
Did you type it in?
Yeah, it works. Do you not see that?
No. Did you put it in again?
I put it in the. Yeah, people are seeing it, right? Everybody sees this, right? I just.
Why is it not working for me? KeenOnTheMarket.com/ETF news.
And then a slash.
Oh, I can't spell my last name wrong. That makes sense. I swear to God. Oh my God.
It happens to me, and you got an easy one.
I spelled my name wrong? Yeah, there we go. Sorry about that, guys. Okay, so it's www.keenonthemarket.com /ETF news. Okay, a couple questions really quick, and then I'm going to let Christian finish up and go through some charts if you guys want. Number one, there is no money back guarantee. The price is too low. Every time I actually give a refund or void, I lose money on that. Because I have to pay credit card processing fees both ways. So there's no money back guarantee. Number two, you will get minimum of 2 trades per week sent to your phone. You can get it via text message, or you can get an email. You can get them both, or you can get them one, or you can get 0 of them. Number 3, you will get the newsletter every single Sunday morning. It's how many pages? 6-page newsletter, all the inflows and outflows. Number 4, this price will never, ever be this low. You will be grandfathered in at $99 for 3 months. Okay, so you'll be grandfathered in at $99 for 3 months. But I promise you we'll never offer this price again. It is way too cheap. Didn't get mad. I tried to talk Christian out of offering it for this low of a price. He said he wanted to offer it to you guys as a favor, as a courtesy, because he actually really enjoys writing the newsletter. So take advantage of this, guys. It's keenonthemarket.com/ETF news. We have spots available. They are going quick. Ron just signed up. Celia just signed up. Susan just signed up. Make sure you guys get in. And Christian, without further ado, yours to wrap up, buddy.
Thank you, sir.
Have a good night. Futures up 16. So great trade on the VXX and the newsletter, and that you send out via Twix, text, and Twitter today. And then wrap it up, and then I'll see you tomorrow in the trading room.
Thank you, Andrew. So one thing I will add to this, as I forgot one point, but and then we'll start looking at charts, whatever you guys want to get to. But I have been doing this writing for a long, long time. When I was on the institutional trading desk at Bank of America Merrill Lynch, this is an institutional trading note that I have been doing for a long, long time. So all the biggest this was getting sent out to all the biggest institutions. It's a similar format. Now I have more time on my hands where I can actually, as Andrew said, it does take me a long time to do, but I used to do a nightly and a weekly newsletter for institutions. So I've been doing this. I'm not new. While I've been sending it out for Keen on the Market just a couple months, I've probably been doing this type of format and writing for, I don't know, 5 or 6 years. See you, Cheryl. If you order this on June 23rd, yes, you'll get 3 months. You don't have to order it again. So if you've already ordered it on the first go around, don't do anything. Yeah, will do, Greg. All right. So I'm happy to look at any charts if you guys want more information on what Power Alpha is doing and all that. I'll bring up futures. Yeah, the trades will come across. They will only be option trades, but of course you can execute them any way you see fit. Awesome, Robin. Glad to see you part of the deal. What does Power Alpha cost? You have to go to the Keen on the market website. It should be listed there. So the indicator is available for purchase right off the website. I also have there's also instruction videos and so forth on the Keen on the Market website. Possibly, Celia. I don't know if I'm able to do that, but if not, I'll talk about that in the trading room. What is my favorite emerging market? I don't have one right now. Not until things, I always come back to EM, and I usually do. Right now they all look the same to me. They all look pretty negative. But once they start turning around and changing, diverging a little bit, then I will, I look at India, I look at Taiwan, I look at all of them. I hate them equally right now. I agree, Karen. Actually, there's two different prices listed on the website for purchasing the newsletter or the Power Alpha. RSP, that's a good question. I haven't looked at that one. I from time to time will look at that. Yeah, it's a -9, and that's the 5-minute. Right now it's a -9. Nice, Aaron. So the price, yeah, I'm not sure what's listed on the website, but you should only, for the newsletter, I guess you're talking about Power Alpha. There might be two different prices. But anybody who wants to purchase Power Alpha, my email is christian@keenonthemarket.com, and I'm happy to, talk about how much it costs and so forth. Oh, yes, good question. When will the new update with these signals come out for the Power Alpha? I think I may be able to do it tomorrow. Thanks for the reminder. So if you notice, my Power Alpha indicator on the bottom has these arrows. So I've been doing some testing the last couple weeks, giving you buy and sell indicators. So that will happen hopefully tomorrow. I'll be able to. So if you purchase the Power Alpha, you will get the updated version for free. There's no sound? Can you not hear me, Carlos? There should be sound. Oh, I see, Mark. Well, I guess, yeah, I guess you can you could purchase it for that price if you do both. All right. When does the newsletter? So Sunday morning is when you will receive the newsletter. Cool, Mark. Yeah, so it'll just be $99 for 3 months. After that, I'm not sure what the pricing will be thereafter, but you will get it, as Andrew said, for a pretty darn good price, locked in for 3 months. Oh, cool, Robin. Yeah, let me know if you have any questions as you're setting up Power Alpha. Happy to answer. SLB. So let's start looking at a couple charts. So SLB Schlumberger right now pretty negative. It did bounce a little bit today, but notice that it closed pretty close to the lows. So all this could flip around in a great deal. You know, just keep in mind that. Well, I think what he said is you're grandfathered in for 3 months rather than the price originally was $99 a month. So he's saying, Andrew was saying that you're grandfathered in for 3 months. EPI, sure. Right now a -3 on the Power Alpha, and I'm kind of neutral about EPI. I've looked at this a couple times, and it's kind of been in this downward trend. And I've tried to play this to the upside once or twice and have only been managed to really hit one profit target on the one trade that I had on. And I think that trade is going to expire out of the money, unfortunately. But it seems like we've been kind of rolling hills. We rally a little bit, sell off, rally a little bit, sell off, rally a little bit, sell off. So it could be that we're basing a little bit. It looks like these hills are getting smaller, but nevertheless a pretty neutral rating right now. ZB, long-dated treasuries. So kind of a tough one right now as well, pretty neutral, a -2. Huge move down today in treasury futures. So pretty volatile, some really big candles lately. But I think ZB is kind of, or TLT is kind of looking for market guidance. It was in a pretty hefty downtrend, but recently, you know, and I think this, personally, I just think it may be a little short-lived, that it's been a flight to quality right now. Netflix and IBM, AMBA, Twitter, Apple, whoa, whoa, whoa. So let me go with, so pretty neutral as well. Right now a -8, but not falling or rising. Hasn't really generated a strong buy or sell signal in a while. So I would say right now it's flatlining. And pretty negative today, down 1%. I would make sure that this low stays held. If not, you may see further weakness. If not, I would say further consolidation, unless one of the big boys steps up and says, I'm going to buy you. IBM, a -9 and falling, pretty weak right now. Fire engines outside. So IBM pretty negative right now. Power Alpha is -9, so I would say weak. Weak to very weak. AMBA. Since the big sell-off, kind of in consolidation zone, I mean, almost looks like a smaller chart of Twitter. Right now a -6, so I would lean on the bearish side, but I think a lot of the damage has already been done. But doesn't look like, right now it's under the 5-day. On my charts, I've got the 5-day moving average, or 5-period moving average, and the 20. The 5 is the yellow. I like to see price action get above the yellow line before I step in. What else? SBGI. So thanks for adjusting, by the way, to the later webinar. Next week we'll go back to 4:30. So -4 and rising. So a little bit of still negative because it's got the -4 rating, but starting to perk up a little bit in SBGI. Notice it's starting to get above, and I would look for full confirmation to get above this shorter dated exponential moving average. What else? IWM, DIS. A -7 right now. It tried this morning to get back into value. So I would kind of stay tuned. It's not rising or falling, so I would say that was pretty good. little bit of support right back here in IWM, the small caps ETF. So, and again, it's above the 200-day moving average. So looking a little bit better, I think, than SPY. Disney. This is a different, much better looking chart. +6, but falling right now. No doubt after the last 2 days, but still above this 5-day moving average, also still above the value area. So I would say more constructive on DIS. You can almost take this weakness as a possible buy entry. I would make sure tomorrow that it stays above this 5-day moving average, but I would tend to think that I would possibly take the advantage of Disney, the weakness, short-term weakness as a buy opportunity. Again, can't give any recommendations, but that's how I see it. Verizon, pretty nasty bar today, -9 right now. I would look for a power alpha crossover, this white line crossing down below the red as a sell signal, which you may see tomorrow. So it looks pretty weak to me. A little bit of support back here that it may find. PK, you're in? Awesome. Woohoo! ALNY and XON, absolutely. Right now a -6. So similar concept. A lot of these charts are ducking below the, a lot of these charts look similar. I would look for a move above the 5-period moving average to get back in this name. So short-term weakness right now. Also, I would look for the white line in the power alpha to start gathering steam north. What else? XON. Same thing, a little weak, right at the bottom of value. So let's see if it finds support and bounces back in to the value area. So crucial area right now for XON, right at this 45.50 level. If it breaks below, I would say sell or take a short position. If it gets back above, possible a bull entry. What else? Netflix. So positive day in Netflix today. Again, right in the middle of value area, but looking a little bit more constructive after this sell-off from Uncle Carl Icahn saying he trimmed the position. Now looks like it's been basing here a little bit and wants to go higher. I would look for a power alpha crossover as your confirmation to get long. You're welcome, Karen. You're welcome, VK. Intel. I don't have to look at this chart. This has been a nasty one. A -10 and falling. Really ugly right now. So it looks a little bit oversold to me. It's dipping way below this yellow line. So possibly you might find a short-term bounce back, but I would say it's pretty weak. And I thought you would see a little bit of support here, but it looks like it's breaking below the support that it saw a couple times. Let's look at the weekly chart in Intel. I mean, what does this look like to you guys? Anybody? What do you guys think this is? Besides a big ouch, Karen. What pattern? Yeah, you got it, Simon. Head and shoulders pattern. Oh my goodness. If that's not a textbook head and shoulders. So we'll see if it breaks below this this neckline. But I couldn't draw this better as an artist. Yeah, not good, Jeff says. So I would watch for, you may get a little bit of a move back up because it does look like it's pretty oversold, but I would say it's got further weakness ahead of it. And I would look for support around the 27 area. Let's look at, no one's mentioned SMH, but I'm interested to see what Intel's the biggest component of SMH. This is also on the weekly chart, breaking into value now, -6 and falling on SMH. So same thing, very oversold. So could see a little bit of a bounce, but overall I'm pretty bearish on semis. All right, so that's all the symbols I see. So one thing again, these things can flip around pretty quickly, I think. If China really rallies, if there's a Greek deal, you could see the market really take off. So again, been using this term a lot, but be nimble. Be very, don't take too much risk carry from one day to another, because we've got more than ever, I think, event risk. When you've got event risk, things can really flip around very quickly. So that's my cautionary tone for the market. As you saw today, futures rallied, and Andrew was talking about it as well. You could have a deal reach someplace or some type of government intervention, and things could really move back the other way quickly. So last one, SKWS, and then we'll call it a night. I think you mean SWKS, right? Skyworks. So on the weekly, pretty negative here, but notice you could see some support right on this Venom line in Skyworks. Let's look at it on the daily chart. -9 right now, but I would watch a lot of support right around here. So look for possibly some consolidation around here. All right. Well, thank you everybody for joining me on a little bit later of a webinar for Thursday night. Hope you had a nice cold beverage with you, or you're opening up a cold one shortly, and we'll get into Friday. It's been a long week, so hopefully we'll see a sustained bounce tomorrow. But we'll see. We'll very much be following what goes on in China tonight. As I talked about earlier, it's better than going to the movies almost, and the Twitter storm that happens with everybody watching it. So with that being said, have a great night, everybody. I'll see you tomorrow in the trading room. Have a great evening.